With Brexit back in the news, does it make gold a buy? Joining us this Wednesday, Peter Hugg, Global Trading Director for Kitco Metals. Pete, good to see you.
Good to be here.
So, Peter, with British Prime Minister Theresa May basically handing in the formal Brexit divorce papers today, how will this play out for gold?
I don't think it's that relevant to gold. This is going to be at least a 2-year process. I think the market has pretty much taken into account that the Brits want to leave. So now it's a process, and I don't think we're going to have any news relative to that process anytime soon. It's possibly as long as 2 years, and it can be extended. So the Brits are going to have to renegotiate trade deals, and they'll come up with there'll be issues along the way and little bumps and little hiccups and news bites, which will affect the price of the commodity market. But generally, this news today was expected, and I don't think the market reacted at all to it.
Okay, well, with Brexit aside, what about the healthcare debacle? Obviously, helped to boost gold prices last week. So, could we see a repeat now with the focus shifting to Trump tax reforms?
Yeah, I'm a little bit more optimistic on behalf of the Republican administration relative tax reform. I think there is some support from the Democratic side, so I don't think he's going to have the same hurdles to overcome relative the hurdles that he experienced with the health reform attempt. My issue again with Trump's promises and some of the policies that the Republicans want to enact is really, it comes down to how are they going to pay for it. Tax reform sounds like a wonderful thing. I don't think they're going to do it on the personal side. I think it's much too complicated. They may do some corporate tax reform. I don't think they'll get to 20%. They may get to 28%. But that will help the equity market to some extent, which could be a headwind for gold. So again, it's going to come down with the budget ceiling debate coming up in June as to how the Republicans are going to support this relative what it's going to do to the deficit. So it really will depend on the package and how he can substantiate paying for it.
Right.
And if you can come up with a reasonable way to pay for it, I think it goes through, and I think that's positive for the equities and then somewhat negative for the commodity market.
All right, so to wrap here, Pete, as we're speaking, gold's trading around $12.51 an ounce. Are you liking what you're seeing? Are you impressed with gold? Or are you waiting for it to hit $12.60 and see if it can hold that level here?
Well, I like gold here. Technically, it's still okay. I'm not really rah-rah behind gold right now. I really need to see this thing break up through 1260, the 200-day moving average, with some momentum and some volume buying. And, until it gets through there, I'm neutral this market. And, if the equities, do regain some foothold and start to move higher, I think the path of least resistance for gold, at least in the short term, is probably going to be lower. Unless we can get through that 1260, I'm somewhat neutral to bearish at these levels.
All right. Pete, it's tough to impress. Thank you so much for your thoughts.
You're welcome.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.